Our deepest fear is not that we are inadequate. Our deepest fear is that we are powerful beyond measure. It is our light, not our darkness, that frightens us. We ask ourselves, who am I to be brilliant, gorgeous, talented, and fabulous? Actually, who are you not to be? You are a child of God. Your playing small does not serve the world. There is nothing enlightened about shrinking so that other people may not feel insecure around you. We are all meant to shine, as children do. We were born to make manifest the glory of God that is within us. It is not just in some of us, it's in everyone. And as we let our light shine, we unconsciously give others permission to do the same. As we are liberated from our own fear, our presence automatically liberates others. Now let's look at your life. Let's look at our lives right now. What is that thing that we're telling ourselves that we can't do, that we're scared to pursue because we may have failed before or got rejected before? What excuses are we holding on to stay stuck in our current situation? See, what I'm starting to realize is that excuses are much like that rope tied in between that elephant's legs. They aren't really real. We just accept them.
Okay, folks, that's just a motivational speech there to start off with regards to the analysis on the FTSE 100 for trading on Wednesday, the 4th of December. Okay then, so basically a little motivational speech there. Basically, if you have a bad day, it's always good to obviously surround yourself with positive people because of the negative energy that you get. Yes, I certainly had a bad day today, and I'm having a bad week so far now. Yesterday, obviously, I managed almost 100 points. Today, I got caught with a lot of stop losses triggered on the DAX and the FTSE. And yes, indeed, I got the actual trade first. Well, first of all, it's my first video on YouTube that's gone astray. Basically, I had almost 100% accuracy on all my videos so far, with regards to all the trades the following day. Almost every trade has hit target, and this is my first video so far that unfortunately the market didn't go in the direction I expected it to. Mainly, well, there's several reasons. I'm going to try and diagnose and see exactly what's happened. But obviously, hindsight. Anybody can be an expert in hindsight. I don't believe in Blue Peter trading. It's a load of bollocks, and to be honest with you. But again, that's why I run the live analysis service, because I operate in real time. I'm fully accountable for my trades. I give my stop losses, I give my exits, give my entries. And yes, today unfortunately was a bad day. I mean, almost well, from starting off from being plus 90, plus 100 down to minus 88 points so far. I've got 3 active trades now. I've got an active trade in the FTSE, the Aussie, and the Nasdaq. Okay, so I'm definitely, I mean, I still remain in the bull camp at present, although the price action in the last 24 hours has been quite tricky. But again, you know, it's no water off my back. I mean, obviously, I've got 3 more trading days left yet, so hopefully I should nail it and go back up to plus 200 points for the week. To be honest with you, I've only had 7 losing weeks in the last 7 years, so it's a challenge. It's a challenge. It certainly is. Okay, certainly is a challenge. Okay, so but one that I'm willing to accept, because as a trader we need to push ourselves. We can't always be 100% accurate in every trade, although I like to say I am. And I have been, okay, and I certainly am on the live analysis service, okay, and well, I've been for a very long time now, so, but yes, it has been tricky, certainly has been tricky. So let's try and dissect this market, okay, and let's see exactly what happened, okay. So first of all, fundamentals, okay, so strong UK data in the morning. Let's just start off with Asian markets first of all, open higher, okay, strong UK data, okay. Other than that, nothing unsettling. Yen pairs pretty buoyant overnight. We had some more. We've got some more stimulus coming through. I think 4 to 5 trillion worth. So more Kool-Aid. Everybody's hunky dory. Yes, I'm aware that we've had a strong economic data out of the US and obviously tapering phase, etc., etc. But to be honest with you, that's a load of BS. Okay, why? Because that was exactly the same situation last week. Okay, so. Where were the tapering concerns last week? Okay, the tapering concerns weren't there. Why? Because all these institutions, hedge funds, were playing the dirty game of pumping and then dumping today. Okay, why didn't they dump yesterday? That's the question you need to ask yourself. Okay, so don't read too much into that, folks. that's psychological games, okay? If you're going to base your trades based on anticipating when the hedge funds are going to dump the market, then good luck to you, okay? You're not going to have a success rate of 80-90% plus, okay? I follow my strategy, which is based on intermarket analysis, and my variables were not calling for a sell-off. Why? Because China was buoyant overnight. The economic data out of China was came in flat, okay, but came in more or less expectations, so nothing concerning there. Still confirming growth. Shanghai was higher overnight. The Nikkei was higher overnight, okay, up 0.6%, okay, so there were no concerns there whatsoever, okay, so obviously US markets were pretty strong in terms of the futures weren't off massively either, okay, so and even the futures now have closed relatively benign, so again, there was no concerns there. Strong UK data, so again, no concerns there. Okay, yes, I'm aware of the argument that you're stating, a lot of people are stating out there that, yes, we've had a higher sterling. Sterling obviously is hurting exports. Exports obviously causing the FTSE to come under pressure. But the argument against that is if they were concerning, okay, I understand that, yes, but sterling has had a spectacular rally, hence the reason why the FTSE's at 6,600 and lagging world indices. Therefore, that's all factored in. Okay, so and sterling didn't make a new high today. So if it made a new high today, then I'd understand. Okay, it's actually fallen. Okay, so so that argument certainly doesn't hold any water. So from my perspective, Aussie and Kiwi were strong. So they're the commodity currencies. Oil was strong. Okay, so that obviously helps the FTSE because the FTSE is a commodity index. Yes, I'm aware. Gold is down, but that's more to do with the risk-off scenario because of the concerns, etc., alleviated. There's no geopolitical crisis at present, so obviously gold is not going to catch a bid. Yes, I'm aware of the tapering concern with regards to gold, but then why isn't that concern on oil? So again, that's something else that you have to take into consideration. If tapering was such a concern and was such a drag on growth, then why is the oil price going higher? Okay, people will point to the fact that okay, we had a drawdown in terms of the supply of crude, etc., which I've just tweeted now, but that only came in the last hour, okay, or towards the end of the evening when the oil prices had already rallied. So again, that's a counter argument. So strong European PMIs have been strong. Okay, UK data has been strong. Chinese data has been strong. So then, hence the reason why oil is supported on the upside. Okay, the fact that gold is going down because there's no concern with regards to geopolitics. Okay, the fact that the Kiwi dollar has rallied is again due to Chinese economic data. The fact that Australian dollar has rallied, yes, due to Chinese data and obviously strong data with regards to Australia as well. So again, no concerns there from my perspective. Okay, so given the fact that we've had a light volume rally, etc., markets have been rallying. All H&S formations, all bearish patterns have all failed because of the Kool-Aid. Obviously, the Japanese they announced more Kool-Aid. Okay, so the Godzilla experiment there's continuing. So from my perspective, certainly no fundamental catalyst there for the sell-off. Technically, yes, I agree with a lot of people out there. Yes, there has been a catalyst for the sell-off, but again, like I said, where was that catalyst last week? Okay, so you have to think in those terms. Okay, so so I think Europeans were spooked today, mainly because obviously I understand the tapering concerns. I understand, but even then, to be honest with you, there was an article out from the ECB regarding QE. Okay. There was deflation concerns this morning because the inflation data came out worse than expected, and there was talk about from the ECB about obviously cutting rates further and obviously QE. So again, that was supportive of equities as opposed to the equities selling off. So it's a real conundrum. Only thing I can come up with is that it was a professional rug pull by the hedge funds because they'd obviously floated the markets higher, etc., and obviously they wanted to dump. So it's all about pump and dump. Okay, so hats off to them, well done from a fundamental perspective, but as a day trader, again, I can't justify the sell-off. Okay, so I must follow my strategy. I follow my obviously intermarket analysis variables. They were distorted today. There was obviously a divergence between risk FX, commodities, and obviously the FTSE today. Obviously the mining stocks were coming under severe pressure. Okay, although they are into support now. Okay, so that's obviously taking all that into consideration. Well, folks, that's basically a summary of fundamentals. I can't justify the sell-off today based on my understanding of intermarket analysis, and obviously technicals. Yes, I'll discuss that now. But I'm a trader who utilizes both and amalgamates both, and they most point in the same direction. And today was a day of divergence. And unfortunately, on these days like this, when the market disrespects every support level, it certainly has to go down as a bad day. But again, we continue, we fight on, and you should always stick with your strategy and your methodology that gives you success in the long run. Yes, you are going to have a bad day, or you might have a bad week, or you might even have a bad month, but thank God I've never had a bad month in 7 years. I've had a bad week, yes, 7 bad weeks in 7 years, but never a bad month. So always stick to your strategy, never diverge from it just because you have one bad day. Keep yourself focused, keep a positive frame of mind. Go out, relax yourselves. That's why I play a lot of sport. I play squash, I play football, I play badminton, I go running. I'm into boxing. Okay, so definitely I play cricket. Obviously in the summer as well. Heaton Mersey Cricket Club. I play there in Cheshire. So keep yourselves in a positive state of mind. Okay, and keep yourselves with positive people. Very, very important for day trading. Okay, because obviously then your emotions start to kick in terms of obviously fear, greed start to kick in. They start to nurture and start to play with your mindset. Okay, and the biggest one is fear. Okay, fear starts to creep in. Should I take that trade? Should I not take that trade? Okay, I'm down 80 points today, or I'm down 50 points today. I don't want to open any more trades. No, you have to remain fearless. Okay, you have to continue with your strategy, continue with methodology, because you know in the long run it always succeeds. Okay, you are going to get days where the markets will be irrational, illogical, etc., etc. That's just part of the game. Okay, it's an anomaly. Okay, and obviously it doesn't occur every day. You continue and you work hard. You go back to the drawing board. You resynchronize, you reanalyze, and you come back fighting hard. Okay, so let's have a look what's happening here. So with regards to the FTSE 100, okay, right, so basically it's definitely gone for that 200 MA. 200 MA is at 6510, so watch out, that'll be a massive support level. But having said that, we've got horizontal support here at 6560, which has obviously been obliterated. We've had support at 6540 again, which has been obliterated. So as traders, what we do, we just delete those support levels. Okay, so we've got support here at 6530, which has been held. So obviously you've got wick support here. So this region will be one solid support. Why? Because the Aussie itself and the Kiwi are strong. Okay, so and also obviously the oil prices have rallied to 96, inverted head and shoulders there. I did point out the reason why FTSE would go higher today due to the inverted head and shoulders pattern. And abracadabra, what's happened? It certainly played out. Okay, so there's the chart that I posted yesterday of oil, and certainly a beautiful pattern. Okay, so let me just try and maximize this. Here we go. Understand. Okay, so let's just put our trend lines in. Okay, so basically we have inverted head and shoulders pattern here. So there was your left shoulder that I explained yesterday, your head, your right shoulder, and off you go to the races. Okay, so then the neckline was at 9170, 9400. So let's just call it 200-300 point rally on the upside, and that's exactly what we've got. We've gone and closed this gap here at 9624, which I explained. Okay, this pattern here initially failed, I explained before, and I did tweet this out. This pattern would fail. Why? Because of the UN resolution with regards to Iran. Okay, that obviously alleviated geopolitical concerns with regards to the supply of oil, and that inverted head and shoulders failed. We sold off. We created gaps, obviously, and obviously every individual who was going long was knocked out before the market actually reversed. Okay, so your first gap fill resistance is at 96.20, and expect 98 to be tagged as well. Okay, so that gap at 98.35 needs to be tagged and needs to close. But in the meantime, expect some pullback here before the next rally higher. Again, that will be supportive of the Aussie, supportive of Kiwi, supportive of commodity currencies, USD CAD. Okay, watch out for that. That will be supportive of oil. Why? Sorry, gold. So expect gold prices to move higher now as well. Why? Because oil equals inflation, and inflation, which is your best hedge, gold is an inflation hedge, which obviously causes gold's prices to go higher. So if gold prices go higher, what do you think happens to the Aussie? The Aussie will move higher as well, and the Kiwi dollar as well. Okay, so keep an eye out for that. And in turn, the Euro USD obviously will move higher as well, which it already has. But obviously we all know with regards to deflation concerns, the euro is being obviously under pressure with regards to that. I'll try and put out a euro USD video later on, and I'll discuss the fundamentals, arguments for and against with regards to that. Okay, so watch out for that, folks. So this is the inverted head and shoulders pattern. Again, this is supportive of the FTSE. Why is it supportive of the FTSE? Because the FTSE is a commodity index. Higher oil prices means higher BP, Shell, and obviously the FTSE rallies. Okay, but again, the FTSE went in the opposite direction. Divergence, okay, illogical, irrational, doesn't explain it based on intermarket analysis, hence the reason why I've had a bad day. Okay, so but again, it's an anomaly in the system. It doesn't happen every day. It's irrelevant to me. Okay, so go back to the drawing board, resynchronize, and we start again. Okay, so on this occasion here, like I said, multiple levels of support on the daily chart. Okay, so we've discussed that. Let's move on to the FTSE 250. Okay, see if we can find some clues with regards to that. Okay, so FTSE 250, where art thou? 1 second, let's have a look. Okay, so yeah, by the way, that's the bull flag on the US dollar index. Here we go, here we are. Right, okie dokie then. So FTSE 250, obviously this is a support level I expected it to hold, because we've been in an upward sloping contracting wedge pattern, and I expected a potential inverse head and shoulders obviously to move higher. It hasn't moved higher, which it has failed. Okay, so that trend line has been negated, but we are back into support. Okay, so what I'm going to do now is I have to delete this trend line. So that's been negated. Once it's been negated, it means trend line disrespected. We tend to obviously destroy it. Okay, get rid of it. Okay, so what's happening here then? So obviously we're into support now, so this is an argument for the FTSE to rally. Okay, I expect a rally on the FTSE here. We did have obviously previous resistance equals support. Again, that's failed. So for now, all we do is, as an individual who's drawing, obviously utilizing technical analysis, is draw a horizontal level, and that's exactly what's going to be support. And this should obviously cause the actual FTSE to rally as well. There are other reasons why the FTSE is going to rally, which I've explained obviously in my live analysis service. So if you do want to get an in-depth view as to why I expect the FTSE to rally, or every trade I take I give analysis, etc., then join the live analysis service. Okay, you can go to my website. Okay, and certainly there should be a link there on my YouTube channel. Go to my website, you can go on the free trial. Obviously I give a free trial for a week, or you can join the live analysis chart service, and the chart itself per month is on my website. Details are on there. Okay, so there are other reasons why the FTSE is going to rally, but this is just a macro perspective. Okay, so let's have a look at the FTSE itself now. Okay, let's look at the micro view and see exactly what this little let's have a look. We'll see what this FTSE 100 is trying to do. Okay, this little rascal. Okay, that's probably the best definition or explanation. Okay, so exactly what happened. So 6575, I did say it was a wild card. They actually went and closed that gap again. That there was no catalyst. First of all, remember I said catalyst ever, just like the oil trade. When I had the inverted head and shoulders pattern, I explained that there must be a catalyst for that inverted head and shoulders pattern to be triggered. Okay. Given the fact that the reason why the oil price eventually, first of all, we had the UN resolution that didn't trigger the oil head and shoulders pattern, because obviously the Iranian resolution is obviously negative for oil. Oil loves geopolitics. Okay, so that failed. Then eventually the oil started to rally and had the inverted head and shoulders pattern due to the strength in Chinese economic data, strong German data, and obviously strong UK data. So once you have green shoots, okay, that helps oil, and that obviously creates a short squeeze for the markets to move higher. Adding the fact that you had a dispute with regards to Japan and China, that obviously helped in terms of geopolitics as well, to a certain extent, not as much as Iranian situation would, or the US-Israel spat would, or any other Middle Eastern country. Okay, there's not much oil that comes out from Japan and China anyway, so bear that in mind. Okay, so on this occasion here, I mean, Japan, China couldn't even keep gold higher, let alone oil. So obviously, that's just putting into context. Okay, so what happened here? So yeah, the gap. Okay, the gap. Again, oil price inverted head and shoulders pattern. Gap will not be closed. Kiwi dollar, Aussie dollar higher. Gap will not be closed. Chinese markets higher overnight. Japan are higher overnight. More Kool-Aid from Japan. Impossible for that gap to close from my perspective. Okay, that's just an insight into intermarket analysis. There is deeper understanding and deeper insight. Obviously you have to join the live analysis service to get that in order for you to learn. Okay, so from my perspective, like I said, I'll go on record, I didn't expect that gap to close, and even, I mean, if you give me this setup 100 times, 100 times I'll tell you that gap will not close. I'm not going to move from my analysis because that's what gives me the ability to bat at 90%. So obviously it was a professional rug pull. All I can say is respect to them. Okay, they did it professionally, they executed it perfectly, and they made a hell of a lot of money. Okay, the market makers, the hedge funds, have made their Christmas bonus. Okay, because every Tom, Dick, and Harry was more than likely along, especially on this inverted head and shoulders pattern here on the FTSE, and they've been spanked. Okay, so obviously we had this inverted head and shoulders pattern here. It was brewing, and boom, failure. Okay, and this here, once we broke this potential head of this inverted head and shoulders neckline, liquidation time. Okay, but even then, like I said, technically I knew the pattern was there. I even said yesterday that there was a wild card, that gap would be closed eventually. Whenever a technical pattern fails, it creates an emotive move in the opposite direction, which it has done. Again, fundamentals trump technicals. Bear that in mind. Okay, so if there's no fundamental argument, now this here the market could have pushed lower and eventually create a short squeeze, boom, right back up to the 200 MA. Okay, and then what it could have done, hypothetically speaking, is it could have created the inverted head and shoulders pattern. So left shoulder there, down we go, boom. Okay, short squeeze, bang bang, Christmas rally, Santa's coming on his sleigh with his reindeers, etc., etc. Okay, so that hasn't happened. So that's what I was expecting to happen. That's why I was looking for a potential buying opportunity, and obviously for the FTSE to move higher. And then we had an unfilled gap here as well at 6602. Okay, so again, that didn't transpire, that didn't materialize. So obviously I was wrong on this occasion, and we go back to the drawing board. Okay, so let's have a look at the macro view now. After that gap, or so should we say micro view, after that gap has been closed. Okay, so what have we got here now? So obviously we're in a bearish channel. Okay, now watch out for this gap here, 6596. I expect that gap to close this week. Yeah, very easily, very easily. Given the fact that China was higher overnight, given the fact that we got more Kool-Aid, etc., etc., I expect this gap to close. So watch out for 6596 on the upside, and 6620 on the upside as well. So that's certainly two areas what I'll be looking for in terms of my understanding. Also watch out for what level is this now? 6620. Yeah, 6615. So watch out for 6615 as well. Okay, so that's an area that we can observe, 6615. Okay, so so on this occasion here, so obviously the market dumped quite hard. This is where I'll actually long the FTSE as well, and obviously towards the last last half an hour or so, was it? So the last few candles, the market makers spanked all the longs. Okay, they dropped it as low as 6509, 6508. Okay, so and I'm certainly I've got a bullish bias now going into tomorrow. Okay, so expect higher prices on the morrow, and I won't be surprised that gap at 6596 is closed. Okay, so that's basically what's happening here. We broke this bearish channel. I expected a thrust higher. Unfortunately, we failed to materialize. Okay, so given the fact that we've got this channel, where we had this channel here, the market was looking very good in terms of that channel. Expected it to break higher. Family fortunes failure. Okay, so basically that's what we're looking at present. Okay, so yes, it can go lower, but remember 200 MA is the master support level. That's where the hedge funds will look to cover any short positions going into Christmas. Okay, so obviously we had this H&S formation. The target was 6625, and that's one of the reasons why I was short. I was long the night before, because obviously once the H&S formation is a target's hit, you generally get a short squeeze. Okay, so interesting times. Okay, folks, I think that wraps it up with regards to the FTSE. Yes, like I said, I've got a bullish bias going into tomorrow. Okay, target at 6596, 6615, and obviously 6620 on the upside, and we shall see exactly what happens. Okay, so I think I'll go and lick my wounds. And hopefully more videos. Hopefully the next video, or this video itself, will be successful. The market obviously materializes the way in which I expect it to, but that's what we do as traders. Okay, what we can do is a plan, obviously, with regards to our trading, do our analysis, do our homework, and obviously each setup that we have, we must look into it with great detail, and understand why the markets have fallen. I understand why the markets have fallen, okay, because the FTSE itself got spooked with regards to Strong economic data out of the UK generally, unfortunately, has had the effect of spooking everyone about higher interest rates, sterling going higher, and obviously causing a sell-off for the FTSE because it hurts the exports. But having said that, that was already factored in because the FTSE itself has been lagging, and the markets have obviously factored all that in. You can't keep factoring that in. You can't keep using that as an excuse for the FTSE to fall lower, okay? Especially when you've got strong Chinese data, Asian markets are higher overnight, Japan's are higher, you've got more stimulus, etc., etc. I can go on and on, folks, okay? That's the important thing, you see. It's not about having your trades hit your targets, etc., day in, day out, and nailing 200 points a week. It's understanding why the market has moved in that direction. This is why I remember a lot of people that I teach, they're very, very knowledgeable, they understand with regards to technical analysis, etc., etc., but they can't understand or pinpoint why the markets have fallen and why the markets hit their stop loss, or etc., etc. Remember this one thing. This is one thing in the Arabs always say: by opposites things are known. Okay, so if you know the opposite of being happy, then you appreciate being happy. Okay, because if you're sad, then you realize the state of being happy. If you're happy, you realize the state of being sad. So with regards to trading as well, very important. If the market consistently hits your targets, then you become complacent, you become lazy, you stop doing your analysis of the way in which you do, etc., etc., and you don't analyze, you don't read as much, okay? But when the market does hit your stop, and you have a bad day, then you go back to the drawing board. It's always good to reassess, and also you actually learn more when a stop loss is hit than when a target is hit as well. So bear that in mind, because it's forced me now to go back and review the markets with more detail. I'll go over every single FTSE 100 stock. Okay, now I'm going to do that in the next few hours. I'm going to review every single FTSE 100 stock, see what the pattern is, and then hopefully that'll give me a greater insight. If I need to change my bias, I will. I'm not stubborn. Okay, if I'm wrong, not think I'm wrong. If I know I'm wrong by looking at charts, and yeah, I'll shift my bias and I'll change my bias. But given the fact that the US market still were buoyant, the S&P wasn't down much, the Nasdaq wasn't down much, okay, the Dow's only dropped 100 points, that's nothing much, okay, so the US market still remain buoyant. We'll see exactly what happens in Asia overnight, but you're watching the yen pairs, obviously they are into support. Aussie still strong, Kiwi still strong. I can't see them being down much either, so interesting. So again, like I said, every day as it comes. I'm just a day trader. I'll observe what happens in Asian markets, and obviously I may well even change my bias in the morning. It just depends on how the Asian markets trade, how the Kiwi dollar and the Aussie dollar trade, etc., etc., risk FX, commodities, and obviously bonds and equity. So, bear that in mind. Okay, so risk on, risk off, wax on, wax off. Goodbye now.